Hello guys, this is your mentor and you know it already. When I come up with a banger like this and like this, I'm joking. So this is gonna be the craziest Forex video that I've ever made. A whole course, full course that's going to explain to you everything, starting from market structure, starting from how to look at price action, everything. So hope you're ready. Hope you have got your notebooks ready, because I'm about to take you to the next level in your career. All right, so let's dive into the video. So the first thing that I'm going to talk about in this video is that higher time frame plays a big role, and the lower time frame is actually just noise that is added based on what the higher time frame says. Okay, so if we look at this this right here, you are gonna see that the weekly time frame is actually the bigger picture, but what we are actually looking at is actually the breakdown of 1 week. So in simple understanding, okay, so now the basic understanding of this whole concept is that if you look at the weekly time frame, you're basically gonna see um, that there's one big block, right? But if you come to the daily time frame, there are 4 blocks. If you come to the 4 hour, there are more blocks. If you come to 1 hour, there are more blocks. If you come to the 50 minute, there will be more blocks. Why? Because the lower the time frame, the more noise there is, the more frequency there is in the market. So what you need to understand in the market is that when you are analyzing the market, you need to know that if you're trading the smaller time frame, what is basically happening in the smaller time frame is just a lot of noise that's leading to the target of the higher time frame. So you need to focus on the higher time frame direction and look for confluences on the lower time frames for you to catch that move that you're looking for in the market. So that's basically it. When you're looking at the market, when you are um, seeing to find a move in the market. So now the next step of what we need to understand is that the market moves in runs. Okay, you will see that the market is in a higher time frame trend. Then it means that there is a run in that upward trend, around to the downward movement, and then around to the upward movement, and around to the downward movement, and around to the upward movement, and it still continues until there is something that happens, which I'm gonna explain to you soon. So there are runs in trends. Okay, there are runs in trends, and the more that you are going to mature in understanding price, you're gonna see this as a run, and in that run you're gonna look for small runs inside, which I'm gonna explain more in depth in this video. Okay, so a run on a higher time frame is a trend on the lower time frame. Okay, you need to understand that a run on a higher time frame is actually a trend on the lower time frame. So as you have seen here, you might see this just as a run or a weekly candle, but it's actually run downward, run downward, run 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 until it makes that daily movement. But on the weekly, you saw one big candle. So that's the basic ideology and understanding that you need to have, that runs are actually trends in the lower time frame. Okay, so now how does a run change its direction or where it's headed? So one of the ways that I identify it is through change of character. Okay, so you need to understand that bullish structure changes to bearish structure, but that is generally you when the run takes out the low. Okay, so when the run takes out the low, basically. Okay, was just adjusting my camera. So now understand this. So when the run takes out the low of the other run, then you will start seeing that the price has changed its direction. Okay, to start going for the other run, right? So on this basic illustration, we see that this is a run, right? And then this run, and then this run, and then this run, and then this run. But basically what happened was that this run, you would basically see a change of character, bringing the run low into the premium areas, or into equilibrium, so that we can take it for the next run. So basically this is how we identify runs, by the change of character. On the higher time frame it looks like this basically, but on the lower time frame we see this happening, and we see this change of character giving us an idea of what to take. Some people basically wait for this to be taken out in order for them to find an entry and take it low up to their equilibrium in order to go along with the real move. Okay, I know this is overwhelming when you're starting off and when you're starting to understand the whole basic knowledge of everything, but it's very important that you understand these concepts. Okay, so now you need to understand the basic market structure. Okay, you need to understand the basic market structure. Okay, so once you have the basic market structure understanding, then it's going to be easy for you to find the runs. Okay, this is where it actually becomes more complex. Okay, where it becomes more complex. Okay, so what I'm gonna do is I'm just gonna move myself here to the center so that you can see everything well. All right, so if you look at this structure, when market is in an uptrend, theoretically, okay, when you look in theory, you always see the market making new highs, new higher lows, new highs, new higher lows, new highs, and new higher lows. So what it basically means is, as long as these lows are not broken, we are still looking for a bullish movement, right? So that is how to identify trend. But in reality, what happens is that whenever the market makes a new high, a new low, and a new high, what basically happens is that this move from here to here is actually price making the new high in order to make that change of character, that retracement, for us to go up to the low. And then once we see another change of character, we'll look for that entry to take it to the high and buy ways. So basically that's what happens. You see, so a swing high is actually the point that is caused, that causes the swing low. Okay, swing high is actually the place that causes the swing low. Okay, so whenever we see a swing high, then we know we have to see a swing low. Whenever we see a swing low, we expect a swing high. Okay, basically what we are looking for. Okay, the same way when we're looking at the downtrend, the same thing. Theoretically, we would just basically see, oh no, created a lower low, lower high, lower low, lower high, lower low, lower high, and then a lower low, and we see BIOS and all that crazy stuff. But in reality, what happens is that whenever price makes a lower low and a lower high, and then you see a BIOS taking place, then we are supposed to see that movement in order to take it to this high. And then when we see the change of characteristics, basically when I'm starting to look for that retracement in order to take it low, and then the same thing over and over again. So depends on what time frame you are, and then the higher the time frame, the more accurate it is, and the lower time frame you actually just use wait for noise, to actually relax so that you can start trading and then making those crazy moves. So that's the basic understanding behind market structure. Okay, so you guys need to understand that the trend is actually your friend. Okay, the trend is your friend. I know you've heard this many times before, but you don't want to understand. Okay, so the swing low is the lowest point that causes the swing high. Okay, swing low is the lowest point that causes the swing high. Swing high is the highest point that causes the swing low. Okay, so the internal structure is everything between the high and the low. Okay, so after the BIOS, we are expecting a pullback every time on every time frame. Whenever we see a BIOS, we must expect a pullback either in an uptrend or in a downtrend. That is the basic knowledge of understanding price action, understanding the market. Okay, don't change your mind when you see a swing, market making swings, and then now, BioS breaking a a previous high or a previous low. Don't continue selling. Look for the retracement so that you can take part of the market. The market is just basically your friend. Okay, basically that's what it means. So once you master that, you're gonna be dangerous. Okay, so now we're gonna look at another figure that shows us the same thing but in a slightly different manner. Okay, so now I want to tell you that in an easier sense, that there are strong markets, there's strong areas and then there are weak areas, okay, that you look for. So the strong area is basically the areas that we don't see fit to be taken out, basically. So when I look at this area right here at the back of my head, I know that when it is strong, it's not gonna be taken out. When it is weak, there's a high chance, 70 to 80% chance that weak area is going to be taken out according to the structure. So when I'm in the uptrend, I'm expecting the higher highs to be taken out for new highs to be formed, right? And then the higher lows to be preserved, okay, so that the new higher low can form but not lower than that low. Then it means it's no more a higher low, okay. Then it means this change of character, basically, for me to look for that high in order to go higher. Okay, so in real life also same thing again. You will not basically see the market just going up straight, like going up straight, but most of the times you are gonna see price making highs, breaking the weak areas and then creating new highs and then coming close to or maybe at the equilibrium in order for price to go higher and move higher. Okay, so it is very important that there are going to be very sharp candlesticks forming at the equilibrium areas. You just see the market spiking down, and doing all kinds of crazy things, in order for you to to catch that move. Okay, so there are strategies that we basically give and ways that we also show you on how to enter, so that you can participate in that move, okay, catch that move and always be on time. Okay, many people basically lose money because of these small tweaks, right? And it's basic stuff. Okay, so it's very important that you understand this basic market structure. Okay, you understand this basic market structure. Okay, it's not really anything that is complicated, anything that you need to think a lot about. All right, okay, so I'm looking at price action again. Okay, looking at price action again, you will see that when the trend changes, okay, then you'll be identifying a lot of change of character. Okay, all right, so let's say that price has been running up on the higher time frame, but on the lower time frame we basically see that price is just making new highs and then taking out the weak areas, all right, creating higher lows, taking out the weak area, creating a higher high, higher low, and then targeting the weak area, which is the high high. So now what is the next thing that we're supposed to see? Seeing price retracing in order to go up. But what we basically see here is that this becomes a new strong. Why? Because there is a change of character. Okay, right, there's a change of character right here. So this change of character right here is now making this strong area a weak area, so which means the next area becomes a weak area. Why? This is now where price changes. Okay, this is where price changes basically, and now we are starting to look for a retracement because this is now the new strong area, so that you can start looking for lower areas, lower regions. Okay, so you need to understand basically what I was explaining to you here, that this is a run and this is a run and this is a run. So basically run, what we are seeing right there is just right here, okay, a run, which is this whole run, and this run is formed because of this, okay, extra confirmation entering, and then the other run forms here, and then you can take a risk entry or a extra confirmation entry to take it all the way higher. Okay, basically. So as we are now going to dive deeper into this concept, I want you to understand that that this is basically everything that you need to know. Okay, Like, this is basically, if you master this, like, you are the king of the market. Obviously, some, some are not gonna believe it, but I'm telling you, this is what you need. Okay. So change of character is, is actually signaled when the run has finished and a pullback is starting. Okay, when a pullback has finished and a run is starting, that's basically what change of character is. Change of character, it only signals when a run is finished and a pullback is starting, and when a pullback is finished and a run is starting. Okay, that's what you find change of character in. Okay, so so how do you increase your your confluence when a MFF analysis, supply and demand, liquidity, premium, premium and discount, using all those things, using fundamentals, sentiments, some news is gonna help, some data is gonna help with, along with this, it's gonna take you to the next level. So basically, when we see that the price has made a high, made a low, and then made this high, so this is the magnification of what's really happening, right? So what we see is the change of character, and then that retracement is actually where we're looking for our short-term sales in order to take it up to the premium or discount area or equilibrium in order to take it higher. Okay, so basically that's understanding behind what we're doing. Okay, so this, there is no guarantee that this can happen, because mostly the counter trend is mostly where the complexity is at. Okay, but when you are with the trend, that's what is making sense. Why? Because you see, sometimes you see price coming, retracing, and then you see it coming all the down, way down, but then sometimes it does that, it makes that retracement, and then when you sell, it just goes a bit deeper, right? Deeper, and then falls all the way down in order to take that up. Okay, so that is a false signal that is showing you. Why is this a false signal? Because we would not want to buy exactly here, because it's not at a premium, it's not a very cheap price for me to buy from. It's more expensive, so when it's expensive, we have to sell it all the way down so that we can have some form of a might have a better price. Okay, let's have a better price. Okay, so basically that is what you have to understand when you're looking at price. Okay, so now when you're seeing change of character, it's not a guarantee that it can also give you false signal. Okay, give you a false signal. So what do I mean by that? You might see that price is actually changing, right? You might see that price made a high, low, high, low, high. So basically what you're looking for is change of character, so that you can take it here, because you saw this as the low, so that you can take it all the way up here, right? But if you're not aligned with the higher time frame, most of the times price continues to go deeper, right? And then like it can change, right? It can change direction, it can continue falling down, and doing all those crazy stuff, moving to the downward, right? Or it can just be a pullback. Sometimes it can just be a pullback, all right? A deeper pullback. So what does that mean? This is a strong strong low is not breach. So as long as a strong low is not breach, higher low is not breach, okay, depending on the trend, then you see, okay, this is the low that has been made, this is the high that's been made, so I'm actually in this range, so I'm gonna make sure that I take it here in this area. So as long as the low is not broken, then you don't need to be concerned, okay, about that specific trade. Okay, but you see here the low has been violated, which means now that we're gonna start taking a loss. So some people actually get trapped here, when this low is broken and they see price going up, they just say that these support and resistance things, whereby they will throw their things and then say no, price is above, so when price is above, I start buying, and then immediately price takes them out. So those are things you also need to watch out for. So many people will be asking, how do I draw my how do I draw my BIOS and my change of character? Okay, basically this is how my structure mapping looks like. Okay, so there is the type 1 structure mapping, and there's the type 2 structure mapping that is here. Now there are 2 different types of traders, right, that can look at the market in two different types of ways. Okay, so the first trader can look at it and then say that this is basically a bias, and they'll be drawing lines between the wicks and all that stuff, and then still say it's a bias, right? Which is a bit more conservative way of doing it, right? But the aggressive way of doing it is you know, bias, and then you're seeing this change of character, sorry, not change of character, liquidity grab. So when this liquidity has been basically taken out, that shows us more confidence in order to take it all the way up, and then go higher. Okay, so basically what I'm saying is that you see this as price taking the high, making the low, type 1, right, going all the way up. So this is now the type 1 type, you know. Okay, but then the type 2 is actually, you know, when we are finding more aggressive type of entries, right? So these are the more conservative entries that you can find, you know, find it and then entering, going all the way up. But then when you're more aggressive, these are the type of trades you're actually looking for in order to take the entry here, or even a bit lower here, you know, on the, when you can zoom into the lower time frame. Just like I said, there is more noise when the market is on the, you know, the lower time frame. So that's basically what you're looking at in the market. Okay, so showing you in an example, you would see that here it is. Okay, so basically what we saw was that price made this high, right? And then since it made this high, you saw this small change, right? So this exactly shows us where we are going to after the bias has sorry, change of character has been made. So this change of character, some people like to exactly start buying, but they don't wait for price to, you know, start showing them. So this exactly shows us where we are going to start retracing up to, and then looking for that sell area in order to take it low. Okay, so targeting the low, and if you have some Fibonacci's like the students in the mentorship, right, then we take deeper targets, right? And then basically when we see that change of character again, we basically look for this right here, right? But you see that the target, you know, it is a bit weaker, right? So this is where management comes in, basically. Where management comes in, because you see this area being taken out, right? And then us looking for that retracement in order to take it a little bit deeper, you know, take it a little bit deeper, because we saw break to go a little bit deeper. But then you see that is a close, probably a break even or 1 hour loss. So basically when we see that happening and price returning to that area, is actually extra confirmation for us to enter again, to take it up to this low. So this is a more conservative entry, right? Conservative entry to target this low and take it all the way low, right? So then we see this liquidity grab and we see this change. So basically waiting for it to come back again in order to take it up. So that's the whole understanding behind understanding price. Okay, now wait. When we see that there's structure in structure, what I also need you to understand is that this is the high, this is the low, this is the high, this is the low, this is the high, right? You see, it doesn't go beyond that. This is the low, so this is the high, so which means as long as we don't see that area taken out, we're going lower. Okay, but once you see that low taken out, then it is a change of character. So that's basically your mind playing around, you know, on the higher time frame and the lower time frame, moving along with the time frames and understanding, you know, the game behind the time frames, what is really happening in the market, right? Understanding all that stuff. Okay, so let me give you another in-depth understanding of what I mean. So this is an in-depth understanding of what I mean. So you would see that basically the white line represents the 4 hour, the blue line is 15-minute, and the yellow one is basically M1. All right, or whatever time frame you like. Okay, so on the 4 hour we see the price is made high and then a low, and then this is strong area. We don't want the strong area to be taken out. Okay, so basically we see that, and then we see the price make a new high. Okay, so now what can we capitalize from when we see that the 4 hour has made its high, a weak area, and then we see a change of character right there? when we see a low being taken out, change of character, which signals a retracement for us to go lower, right? And then when we see price coming to an equilibrium area, we want to see 15-minute change of character so that we can see a 1-minute entry in order to take it higher, right? That is basically one of the strategies that we have, that we're giving an understanding of. Okay, if you want to learn more, stick along. All right, so it's not all the times that the 4-hour bearish trend is going to align with what we are looking for. Okay, so you must expectation of order flow, for our lows and for our highs. That's what we are basically looking for. We're looking for price to make highs, and then lows, and making highs in order for us to take it lower. Okay, now to create a new 4-hour high and the lower time frame switch bullish for the 4-hour to pull back. When price returns to the previous 4-hour strong lower high, our expectation is for price to sell off, but anything can happen. Our mission is to observe how price develops around these areas, okay, and listen to what the market communicates to us with a neutral mindset. Okay, so lower time frame structure development with higher time frame POIs helps us guide to be in the flow of the market and execute in harmony with the market. So it's all a mechanical framework to help guide us through the order flow of the market. Okay, so basically, if you are in the premium areas or the equilibrium areas, then on the 4-hour, you must make sure that you are using your POIs, points of interest, multiple things, fundamentals, to wait for price to communicate to you and show you that it's not ready to start falling lower. So what I basically do is I wait for change of character in order to go lower. Okay, just like I explained to you in with this with that. All right, so so the basic market structure is that is the basic market structure that you need to understand, and you need to understand that if you want to make it in this game. Okay, all right, so now consistent actions brings consistent results. All right, if you want consistent results, you must have consistent actions. Okay, so utilize a set of number of time frames for market structure is key to building your consistency. Okay, so there is the daily time frame that you use for perspective, the 4-hour you use for narrative, 15-minute for immediate buys, and the 1-minute for timing entries. Okay, if you don't like the 1-minute, you can basically even use the 5-minute, you can use the 15-minute even for, and depend on what you like. Okay, so now the daily is when is the 4-hour trend likely to turn. Okay, when I look at the daily, I'm like, when is the 4-hour likely going to turn? Okay, the 4-hour is, we're watching the 4-hour to continue. Is it in a continuation or in a pullback? Is the market running up or is it running down? What is it doing? Is it continuating or is it making a pullback? A pullback. Hey, all right. So the 15-minute confirms when the 4-hour continuation is ending and a pullback is starting, vice versa. Okay, and the M1 confirms the 15-minute turning points. Okay, so know that the higher time frame narrative, actively monitoring the lower time frame price action, allowing the trade setup to present itself. All right, not you presenting the trade. Okay, that's the basic. Okay, so once you have mastered that understanding, then you are going to understand that the market is all about rotation. Okay, it's all about fractional order flow. Okay, lower price action, all right, it leads to higher time frame price action. All right, and higher time frame price action leads to higher time frame runs, which leads to lower time frame price action. It's just basically that. So the market doesn't really move, unless there is a lot of noise in the market in the smaller time frame that leads higher movements in the higher time frame. Okay, so what happens on the higher time frame must first happen on the lower time frame. Before it happens on the lower time frame, it first happens on the higher time frame. So that's a basic understanding of what you need to know. Okay, so to make it a bit more clear for you, look at this graph. All right, look at this graph right here. Okay, so you're gonna see the strong highs and weak lows that are being formed on the market. Okay, strong highs and weak lows. So now strong lows, they are actually now areas that we don't want price to basically take out. And the weak areas, weak lows, weak highs, actually areas that we want price to take out. Okay, so now what you need to understand now when you're looking at this right here, okay, what we want you to understand when you're looking at this basically, all right, is that whenever price forms a strong area, then we want to see a change of character taking place, so that we can take part of the 15-minute touch and then take it all the way up. Okay, target that area. And when we see the 4-hour showing us, or the higher time frame showing us that run, a strong run, then we want to see a change so that we can take part of that move and then take it all the way down and then eat up. Okay, and then we are still monitoring the high time frame, waiting for the high time frame to go out, to show us that retracement or that run, that the run has ended, by confirmation of many things. And then once that is confirmed, we wait for a change of character in order to take that move and then take it all the way up to the target. So basically that also is the same thing applied whenever the higher time frame area has been taken out, which means now it's a change of character. Then we're basically looking for price to show us another lower time frame change of character, so that we can start taking the counter trend trade in order for us to take that move and then eat the money. All right, basically that's the basic understanding behind price action, right? So understanding where the lows are and where the highs are, and where the strong areas and where the weak areas are, that's basically what helps us. Okay, so now this is what you need to understand. That's basically it. Okay, so you will see that the lower time frame switches bearish to facilitate higher time frame pullbacks. So it's always signaling high time frame pullbacks. Okay, and then you would also see that lower time frame also switches bullish to signal the high time frame pullback has finished. Now we're starting with the real direction that we've been looking for. Okay, so fractional expectation of order flow, that's basic understanding of how the market moves. That is the theory part of this course, and I expect you to understand the basics of the course. This is what I want you to understand. All right, I need you to sit down, watch this video over and over again, take your notes, and then once you've understood that, I'm telling you, this is the only thing you will ever need in this market. All right, this is the only thing you'll ever need in this market. Okay, so now moving into the charts, looking at my charts right now. Okay, so this is basically my trading view, and I just want to explain to you what we were talking about on that video. Okay, so you would see that this one basically is Euro USD, chart of Euro USD, and we'll be looking and seeing that there are some executions of trades right here that were visible, right, or that are visible. But once we see that that the 4-hour, right, the 4-hour, if you look at the 4-hour right here, all right, 4-hour, you see that the 4-hour is actually showing us that it has made the high. All right, so basically, let me get rid of this and this right here. So basically what we see is this is the low and this is the high. Okay, in the market sense of understanding. Okay, so this is the low, right, and this is the high. So once we see that high and that low forming, and this is the low, why? Because of this break of structure. Okay, so we see the BIOS forming right here. Okay, so after the BIOS has formed, then basically what we're looking for is the retracement in order to sell. Okay, example of that. So now we use the higher time frame to determine where we're expecting price to go next. And once we have an understanding of where we're expecting price to go next, then we know after what that happens, we are also expecting what will happen after that. So at the back of our minds, we have an understanding. Okay, so this is what I'm looking for. This is the low, which means the range that I'm in right now. Many people like to go to the higher time frames, do a lot of things and draw a lot of lines, but this is how basic it is. So this is the range that I'm looking at. This is my high, and then this is basically my low. Okay, so now that I see this my low and this is the range that I'm in, I basically look for my um for my range. Okay, equilibrium is around here, right? And it's also in the best price ever. Okay, so once I look at the best areas ever, then I know, okay, I'm expecting price to go to one of these POIs so that I can take them lower. Okay, so that's understanding of the 4-hour. And then I go to my 1-hour time frame, and then I see on my 1-hour time frame that the price actually confirms to me, no, actually the 50-minute, all right, the price actually confirms to me right here that after that 4-hour break of structure, that here price fails to show me is breaking lower. The fact that price is failing to show me that it's breaking lower, this is some advanced stuff, okay, that we see here. All right, we see price failing to break lower, and that helps us understand that as we're going higher, okay, we are going to see a retracement and then enter right here in order to take the counter trend move. Okay, so this whole time we're looking for the counter trend in order to take it higher, right? Counter trend in order to take it higher. All right, then we see here this is change BIOS right here. Okay, next move is from here. Okay, seeing this area here and taking it all the way up. Okay, all right, then we see this BIOS here again. So you see this BIOS, see, because obviously everyone can see this high being made, see this low being made, see this high being made. So then we know, okay, in the equilibrium areas, if we not find this entry, then we find this entry right here to take it all the way up. First target here, and if you're in the mentorship, you understand what I mean by that. Okay, so we see this as the new high now made, and this the low. All right, so what we're basically looking for is a area again to make an entry. So we basically see price coming down all the way here, making this spike right here. Would be expecting it to be in this range, okay, from here to here. So we're seeing price coming here, first entry probably would have been made here, but we see price doing that and coming at giving a spike. You see this change of character right here, giving us entry right here in order to take it to the main target of the higher time frame. So after the higher time frame entry has been made, then we know basically where the higher time frame is going next, which is right here. Okay, so that's the basic understanding of what we are looking for in the market. Okay, what we're looking for in the market. So it's basically noise when it's in the lower time frame, but it makes sense when it's in the high time frame. Okay, it makes sense when it's in the higher time frame. It makes no sense when it's in the lower time frame. Okay, so you need to master understanding what the high time frame says, and then speak the language of the high time frame, and then you have patience in order to convert what you see on the high time frame into a exact entry, an exact position. Okay, so that's where you start seeing now, the 1-minute entries, the 1-minute entries and the 5-minute entries and all those crazy things. You see, but for this is enough for me to make you guys very successful. All right, that is enough for me to make you very successful in this trading industry. So understand this, guys. Once you have an understanding of this, it's gonna make you very successful in the market. All right, so if you guys want to learn more, right, Sophia FX basically gives our own understanding. Like, if this value was like not, if what I gave you was, and you want to say like, I want to learn more, then you can like holler us, and then we'll come back to you, right? If you say, oh no, like I want to learn more, I want to dive deeper into this thing, right? Yeah, then basically we can give you more smart money concepts, simplify it up to the lowest score, just like I did now with this one, even more. All right, this is our whole focus. We we teach you how to execute with zero hesitation. If you are a swing trader or a day trader, will also help you. So meaning that you can have a job and still trade with us, or you can, be a person that stays at home and then you can still trade with us. So we also teach you a mechanical way of trading and also looking at the market. And our minimum R to R is 5 to 1. Okay, so we help people to fund challenges, also to pass funding challenges, which is like my Forex fund, and also all the other guys, since my Forex fund has been closed down, FTMO, I don't know if it will be closed forever. For now it has been closed. Okay, we help you scale to 7-figure trading capital and also build financial independence. Okay, so the website is right in the description below. Okay, we have many payment solutions. You can pay through Bitcoin, you can do bank transfers and all that stuff. Okay, everything is available on the website. So once you go to the website, then you guys will be led to that. Okay, so hope you guys enjoyed the video. Hope you guys got the understanding of what it basically means to be a professional trader. Professional traders understand the market. Okay, we've got around 70 plus videos right now as you speak that are on the website. Okay, 70 plus. Okay, which means that there's more. All right, yeah, 70 plus videos that are on the website that you guys can go and watch and that you can learn from, just for a very affordable price. Okay, we are not really up for creating get rich quick schemes and all these things. We believe in mechanism, believe in understanding price. So our target is actually to help traders become the best, to get funded with up to 400k within 12 months. Like, even if you don't know anything about trading at all, the plan is that we take you to get funded with many funded challenges with up to 400 k. That's a goal. Yeah, so that's basically what we do at Sophia FX. So you would also see on our website everything about our course and what we're giving and what we're teaching. So that's basically what we're teaching, right? So I hope you guys get it right. Hope you guys understood. And subscribe and like and write something down in the comment section if you want to learn more, right? If you want more videos, or maybe you don't have money to buy the course and then you want to learn more. So your subscription and your comments can help us with the algorithm, so that we can make more videos for you that are like this. All right, so very important that you like and subscribe. Have a blessed day, guys. Peace.